Okay, great. Once again, good evening, everyone. Welcome to tonight's webinar. We are again delighted to have with us Kong Hao to share with us about the market outlook. We have been hearing Kong Hao's outlook and view of the market for the last couple of quarters, and it's always very interesting how things unfold in the market and how his assessment of the market, matches with what is going on right now. So I'm very excited myself to hear what he has to say, especially now with, as you all know, a new president in the US. I think that really impacts the market quite a fair bit. So without further ado, I'll just go through very quickly. You all know that this is part of the Learn for the Pro series of education, so I will just quickly run through this with you later. I'll come back to you later. So quick disclaimer, anything that is shared today is for educational purposes only. It is not a trade recommendation or stock recommendation. So if you are partaking in the market, do your due diligence and also consult with a licensed financial advisor. Right, so with that done, we'll be taking Q&A towards the end. So do put all your questions in the Q&A box. Anytime you have a question, just put it there. Avoid the chat box for questions because it'll be easy on our side to look at all the questions and answer them. And if you wish to ask questions directly, you are welcome to just click on the raise hand icon and we can unmute you to speak. So without further ado, let's introduce Kong Hao. Most of you will have known him already, I believe. So Kong Hao has been in the market since 1995, a very seasoned market professional, both on the buy side and the sell side, and his passion is sharing his experience and knowledge of financial market with us. So with that, I'd like to pass the stage now very quickly to Kong Hao. Kong Hao, please go ahead.
All right, thank you, Nixon, and thank you all for tuning in. And it just jump straight to the topic tonight. And definitely, I'm more excited to share to what I have prepared for you because the relationship that I have with CGSI has been 4 years by now since 2021, and every quarter I share my insight. So I think tonight is a presentation of what we have expected over the last 4 years, how Singapore market have performed, and it has emerged. And this is what we have planned for since 2022. So I'm going to give you a quick recap over the last 4 years. Then we're going to explain to you about the external risk that I'm seeing here, but the strength that the Singapore market has. You'll be amazed at how much strength that we have. And finally, it have broke and it's going to trend for growth. I'm going to explain to you the reason why. It's quite unbelievable. I know that, but just stay tuned to the end. I think I'm just going to present for, keep it short, less than about 40 minutes. Then we're going to have more time for Q&A. Okay, so this is about myself, and for those that first time hearing me, and after that you find that it's pretty intrigued, you would like to learn more, you can always go to the website to find out more about myself. Down there, there's a link. And so this is disclaimer, and that's my disclaimer, and always a pleasure to have a platform to share. And so you have to understand that what I presented here, it is not a recommendation. So therefore, consult your broker, who is CGSI. And I think the platform, every time I'm given, whether it's physical or online, I always feel very excited because I can shape the mindset of the investor or traders. So whatever platform I'm given, I take this opportunity to create a lateral thinking in every investor and traders, knowing when to take a calculated risk with market uncertainty like today, and definitely a bolder risk when opportunity arise. And so tonight, my topic is about Singapore market and Asia. And opportunity is here. I think you never heard me with so much confidence, but sometimes we just wait. We need the timing, and the timing was end of last year, which I'm going to explain to you why. And let me just do a recap over the last 4 years, what we have discussed. And every quarter, I will have this topic with CGSI, going to present my thoughts and my outlook for the market. So let me just crawl back a little bit on last year and the Singapore investment landscape in August 2024. Now, so structurally and usually like fundamental development, I like to study into the macro development to identify the potential trend of growth for any market, whether it's commodities or Japanese market or India market, Singapore market. So this is my expertise. I like to look at the macro, but I also like to confirm it with technical study as well. So that's who I am, and it works very well for me. And you can do that as well. So August, I was expecting that the markets for Singapore market has been doing resistant at about 3,400 for the longest time. I think many investors, including Singapore investor, are kind of lose faith in Singapore market. But over the last 4 years, I've been telling you, please don't give up. There's a lot of beauty about Singapore market. So I say that in August last year, I say if the market closed above the last trading day, it closed above at 3,004, and I think it will change the landscape for the years and decades to come for Singapore equities market. So now how about today? Today, of course, this slide I prepared about 2 weeks ago, and today I just capture the STIs at 3931. So it's slightly another about 60 points higher. So you could see that at the last day of the year, this is a quarterly chart. It closed convincingly for the first time in the history of Singapore. After this was '08 crisis, and the Singapore market technically, structurally has been trying to break above this 3,004, but each time it failed. Now, so to me, technical is important because it speak about prices, speak about investment, commitment, money already throw in. So so for those that are not in technical, I hope that you'll feel intrigued that you perhaps want to also integrate technical into your fundamental study. So that's what I'm seeing here. Now, even to the extent of today we're here, even the extent of external crisis, say, for example, US, I'm not suggesting that US will crash. Say, for example, US crashed. And of course, the market will have some retracement. But this 3004, I would say that in months or years to come, it should become the support because after this break since end of last year, the market, I believe that is starting a new period for Singapore market. So later on, I'll give you some fundamental understanding why. And let's do a recap on the first year that I have this relationship with. So thank you for Nixon for introducing me to CGSI. That every quarter we'll be doing this. So let me just start with the first year. And in 2021, what was my expectation for Singapore market? And a lot of investor kind of lost interest in Singapore market because it was stagnated. So then my strategy in 2020, 2021 or way before it was because I'm seeing this is that we don't be passive in investing in Singapore stock means that you don't buy and hold it forever. It don't seems to work because Singapore do not have a growth story. Yes, the country have the growth story, but the stock market don't have the technology stocks that they have. They don't have the growth story because you need a growth story to see a trend to come, a major trend to come. So now, if you look at Singapore market, then was in 2021, we identified that Singapore have this very unique 1,000 range. So every 3-4 years, if it reach a target, just cash out most of it. Then crisis every few years will come. We are a small economy, so when external have crisis, we will suffer. So when it come, so our strategy back then, 2021, is that when it come, we just try to buy on dips. So that was COVID is over. This was here, and we're midway. So we discussed that there's still room that market will continue to move up. Yeah. So now then comes 2022. These are all presentation I've done with CGSI. So I just screen capture what we have discussed back then. So you remember what happened to 2022, June 2022, that was US hit a high inflation of 9%. It was very bad. 9% is very bad. It affected the whole world. I don't see any part of the world are not down. So most of the, because of the 9%, every market was down. So I have this topic called Surviving Guide in a High Interest Rate Environment with CGSI. So then I make an interesting observation here is that we begin to understand that maybe the range, Singapore range market that we're experiencing is coming to an end. Why? Because we discussed back then that because of the high inflation in 2022, before it hit a high 9%, the market was like 4, 5, 6 CPI. We could see the Nasdaq's been coming down this much. But I'm seeing that there's a flight to quality Where US market is down, US is a very big market, but I could see that there's a flight to quality to the Asia market, especially Singapore market. So in behavior science study, we have to read into the minds, the flow, the fund flow of where the hot money is. So the big money, it seems to find Singapore as a safe haven. So that's what I have presented back then, that Singapore in time of crisis, remember that was very bad, 9% inflation. But there's a flight to quality, means that whenever there's crisis outside, they will find Singapore as a safe haven. So I say that we may suffer, but not that bad. And subsequently, it's true that when the market come down, that's where Jerome Powell started a high interest rate of 75 basis point, quite a few rounds. So the US market have down 37%. It's considered bear market. Any market is down from its peak more than 30% is a bear market. But look at Singapore from point to point, it was only down 14%. So for the first time in history, I never see Singapore since I started the market joined the market in 1992. Oh, sorry, 1995. I'm not so old yet. So 1995, I never see the Singapore market go opposite of US market. So usually the past was when US down, Singapore down more. When US market go up, Singapore market don't move up a lot. But this time around is reversed. When Singapore US market is down, Singapore go opposite, it move up. When US market was down, Singapore also moved down, but not as much. I never seen this phenomenon in Singapore market before. So that was the first time. So I began to change my thought about Singapore market. At the point in time, our strategy is maybe not the range, maybe 50% range, but you also hold some 50% because I'm expecting that the market to break this 3,004 in months or years to come. That was in 2022. And look at the recap of 2023. So there was uh, there's a lot of unrest, geopolitical tension, all this and that. So the topic was seizing opportunity amid times of unrest and inflation. Now, so then we discuss about the Singapore market, that because of what I'm seeing, the flight to quality, that Singapore became a safe haven. Why? Because outside the money out of Singapore, what is it, from China or from US, from European, Middle East, I think we have emerged from COVID. And after COVID, my personal observation, Singapore became a tech hub, became a financial hub, became a pharmaceutical and bio hub, became a trade hub, became an air hub as well. And then that was 2023. I said potentially we maybe become a green hub. But during this year budget, I think PM announced that they're going to go for this nuclear energy. They're going to study on that. So indeed, we are getting there. Not just potentially, I think we already have the flag on the soil that we committed to be a green hub. So now a lot of things that are going on. So then my expectation is that I think I want to hold. I don't just want to trade the range or invest in this range of this 1,000 point. That was in the past. The past 10 years I've been doing that. But I want to hold a bit more because I believe that Singapore will break above this 3,004, and we're going to go into, even at this price today, I think there's so much value. The P ratio is pretty low and they pay interest, and there's a lot of growth. Now, in the past, at a point in time, even in 2023, I cannot find a value proposition what will cause this break and what will cause this growth. But today I found the answer. Not today, but this year, I finally understand. So I was hoping at the point in time where I described to you back then, 2023 and 2022, is that I hope that STI will attract more technology company to be listed. Then the whole composition, the component of STI would be very different. We may enter into a phase of value and growth, but it is even better than what I'm expected. That one may come later. I'm still hopeful, but there's something else that we have already entered the value stage, getting into the growth. Yeah, okay, I'm going to share with you what happened here. Now, so today, where is STI? So we share about the break, and today STI is here. Okay, so the break of 3004, you can see that it clearly rise above the past era of Singapore. So we're moving the new era, but of course, from a value stage, the next one is that the value stage, if able to continue this value stage, you enter into the growth. But what will cause the growth? Is it the more tech stock going to be added to Singapore stock market? I hope so, but maybe this one we can't really see that yet because there's no commitment. But there's something that we have already committed that is coming. Well, I'm going to share with you why, okay? Just a few more slides because my target is to finish my presentation within 40 minutes, so it's not going to be lengthy. Now, let's talk about the external risk that the whole world is facing. So, no one is immune from this external risk. So, what are the external risks? Is tariffs have just begun again, and I think it's going to get more intensified. So, that will lead to inflation. So, geopolitical tension is ongoing since I think November 2023, been a while now. So, this will always lead to inflation. So, the keyword is inflation for this year. Unfortunately, once again, I think Jerome Powell last night has mentioned that the interest, the loan rate is going to stay at this level for a longer period of time. It means that we are not going to expect any interest rate cut months to come. Now, so I would say that inflation is still the greatest fear of the market. For the US market, I know that a lot of Singaporeans they go to trade the US market, invest in US market because it was or it is hot. Um, for those that want to know about what will cause the US market to continue to move up or come down. Now let's examine the US market. Of course, the emergence of DeepSeek send a stress to the across the US market. But honestly, if you look very closely to what actually caused a lot of stress to the US market, it's not the China tech overtaking the US tech. Not so much. Yeah, you could see that this was the emergence of DeepSeek. The whole few days was down 6%, but something else happened that was somewhere in early December. The whole market was down 8%, and the small cap or SME stocks, it was down 12% this period. This was the period in December Jerome Powell said this. In 2025, instead of having four cuts, because they have this committee, they will meet before the FOMC meeting, so the board member will cast their votes. So he said that instead of having four cuts that we projected, that we hope for, but now 2025 will reduce to two cuts. Yeah, so it sent a signal that to the market that inflation is not over. So for just that statement alone, the market was down 12% for the Russell 2000. Yeah, so I would say that the whole market is still under the stress test of inflation than anything else. So watch out for it. But I would say that Singapore will not be that bad. I'm going to share with you why. So earlier, structurally, I already shared with you the chart. Even it come down, I'll be happy because at 3004, I'll be waiting to accumulate some more Singapore shares. So, but uh, let me just bring you into the trend of Singapore into the future. Why? Okay, let's talk about its opportunity and its strength. Now, where's the strength? And two things I can narrow down to. Then of course you ask me, how you're supposed to talk about STI stock, not about talk about Singapore economy, but they are related. Okay, just bear with me. I'll share with you very shortly. Now, first of all, we have a strong Sing dollars. When inflation comes again, um, we can manage inflation better. And number two, the attributes that we have is our economy, our stock market is well diversified. Okay, let me just share with you why. Now, look at this dollar sing. Of course, a lot of people will say, investor will say that US dollar is very strong. But guess what? Singapore dollars is even stronger. Now, if US dollars is strong, but Singapore dollars even stronger, look at this chart, you'll know. Yeah, over the last 40 years, Singapore currency have appreciated against the US dollars by 40%. And in currency terms, that is a lot. I know a lot of people in Singapore like to go to Japan for holiday. Can I say that if Sing dollar appreciate by the yen by now, the 40%, I think many of us will take would maybe do 2 or 3 trips to Japan. Yeah, so what I'm trying to say here is that because Singapore, we are mostly takers. When I say takers, means that we import most of our products. So a strong Sing dollars is important because in a time of inflation, may crawl back again, which likely with tariffs, it may go up again. So the MAS were able to use the strong Sing dollars to manage this so that the cost of living in Singapore will be better managed. Yeah, cost of business as well be better managed because in the context of uh, stock market. Yeah. Now the other one that I like earlier, the second point is that Singapore is well diversified. Now look at Singapore investment throughout the world. These are data from just 2022 alone. I still don't have the data from 2023 and 2024, but I think in terms of the ranking is about the same. But just on 2022, you could see that Singapore, that means from Singapore out, we pour money out to the world to invest. Who have the largest portion? And there's a saying that whenever you spend the most time and your money is, that's where your heart is. Yeah. So of course, most of us are hard. If you're a married man with family, you spend most time with your family and you spend the most money, that's fine. Because that's where you place your love is in the family, with your wife. Yeah, you don't have a wife, doesn't matter. So you spend your time and money in your interest, in career upgrading. That's good. Now, so Singapore spent the most money in Asia, but particularly which country? And because of that, I begin to understand what is our growth story to be. It's not just tech stock to be added. I hope it will be added. Now, so this become very important here is that now, as an investor, Singapore, as a country, companies, as we invest outside, as SGX listed companies invest outside as well. So we don't just list company and do nothing here and do our business here, uh, domestic consumption. No, no. For us is that company listed here, we do business outside of Singapore as well. Now, when we invest, when we are referring to Singapore government and also Singapore itself and Singapore businesses, listed or non-listed, that's what I'm referring to. We invest the most in China. Yeah, so we invest the most in Asia, Hong Kong, Indonesia, Malaysia, but we invest the most in China. So now the China growth story became important. If now I became to understand, it took me a while to understand. So I keep on trying to ask myself, what is this break above 3004, which I believe, strong believe, technically is going to bring a third wave that is coming. But what is the story behind? So when I look at in 2022, when I look at this investment, but China must grow. When China start to grow, because we have a lot of investment in there, we invest in China. So when China grow, just like you as an investor, when the investment grow, our income will grow as well. Our wealth will grow. So that's what happened here in Singapore listed company. They invested a lot in China. So when China economy start to pick up again, STI will grow. Singapore story will grow as well. Okay, let's look at specifically in China itself, what have they invested? So this one you can see for yourself. Manufacturing is number one, followed by real estates. I think 2024 should be lower, the real estate, yeah, and the finance as well. Now, let's talk about the strategy. That we're going to go into the time of Q&A, and I hope that we still can end at 8:30. It doesn't matter. So short and precise, that's the key. And the strategy for Singapore market is this. Now, so a rising China benefits its investors. So earlier we discussed about we invested a lot in China. So US invested the most in Singapore. But Singapore invested the most in China. It's just like you invest the most in which counter. So when the counter start to appreciate, it means that your portfolio also grow. Yeah. So as we invest in China the most, not just in 2022, but 23, 24 as well. So when China growth story start to pick up again or start to pick up, then our company will also benefits as well. Okay, so later on, I'm going to share with you a chart that that 50% of their exposure is in China, Singapore listed company. Who are they? So you can take a closer look at who they are. Now, so what is the China position amid global uncertainty? So in uncertainty is not just on inflation, but I think China do it very well. In fact, China don't have inflation; they have deflation. but they know that they have to also take on the war. The war is in inflation. So therefore, what they done in 2020 and 2021 until today is that they deleverage on their housing. They do not want their people to over leverage on all this uh, finances about houses. So it's in preparation of the global inflation. So I think they're quite right. So I do not think inflation is a big issue for China, but they also need to acknowledge that because they're also taking on the war as well. So I think inflation, they're quite well managed. In 2022, they kind of clean up their system. Yeah, the leverage culture in the system, which personally as an investor, I welcome that. Now, in terms of trade and business, which is in the past, the trade and business was in manufacturing the low-end stuff. Um, but what we could see that in EV race, they became number one last year, BYD, or the year before, I can't remember, but they became number one. So now, just last month in January, in terms of AI tech, they have emerged. They're not number one yet, but they have emerged from, I wouldn't say nowhere, but they have emerged, and it sends a threat to the US market. So, which is uh, a good sign for consumer because I'm a consumer. We are consumers. So it's a good sign. There's always good to have competition. Then things become cheaper and more, it is better and more robust. So, but China's story is that the new story in this generation for growth. So even in, I think uh, our government say that the growth for Singapore story is also on technology as well. So I think that's a no-brainer answer. So now China has it. That's what I'm seeing. They have transit from a low-end manufacturing successfully, EV, and they're quite on par in a way or slightly better, not in terms of size yet, but in terms of technology in AI. But for AI part, we will take some time to know more and more as time pass. So in terms of trade and business, I think they're doing well. In terms of debt, so some of us are concerned about debt in China, but I'm not too concerned about debt in China because you have to understand what is the debt about China, the local government debts and the central government. So the focus should be on the central government. So as long as the central government has the money, um, I'm not too worried about they will face a liquidity issue. Yeah, so you have to understand about just look back into an individual lifestyle is that we cannot spend more than we cannot spend more than we earned. Yeah, so most of us have debt because we have house. So as long as you earn more than you spend, including interest payment, all this and that. So generally, all these are good debt. So the bad debt is that you spend more than you earn. You can continue to do that, but after a long time, the bubble will burst. So that's become a problem. So in terms of inflation, the trade and business, and debt, from my assessment, China has been doing well. Yeah. So now, technically, let's look at the Shanghai Composite Index. These are basically measure all the stocks listed in Shanghai and Shenzhen. Yeah, because these are the largest exchange in China. So all the stocks. So we could see that China over these years has been consolidating in a triangle. So those who enjoy technical studies, you know what is coming up. So if the market continue to grow, there's a chance that this will break above. But of course, if the growth is on a weak foundation, then it's quite certain that you'll break on the downside. But as I discussed very briefly on that three areas, I think they're building a very good foundation. And I think this time round, they are ready for the growth. So I'm waiting for it to break above this, which I'm already in position for a while. When was my first investment in China? Is what was in 2016. So over this time, you need a lot of patience. But I felt that the time is quite near because if for those into a lead wave, which I combine with fundamental, what I'm seeing here, this is the first wave, second wave, and third wave. So at this point, it is in a value stage, waiting for a breakout for growth. And from the past years, I think China are quite ready for take on this. Why? Because this is the first time I never see China government doing that. they have inject fund to the financial market. Yeah, they have never done that before, but China unleashed stimulus bliss. That was last year, September. So in order for them to do that, it means that the infrastructure, they are quite ready to take on the rest of the world. So that's what I'm seeing here. Now, so again, going back is that if we have invested a lot in China, when China growth story pick up, Singapore listed companies will also benefits as well. And let's look at Singapore growth story. We have a period of decades of range-bound market. Yeah. So we have a period that finally it broke above this 3,004. So we're in this value stage, and I finally understood why there's a growth proposition because of our investment in China. And one sharing here, how to invest in China. Of course, later on, I'm going to show you some of the listed company that Singapore has and have part of 50% of their revenue are from China. So if let's say you find that stock picking is tough, so this is one of the consideration that you can consider. So even for individual stocks, where I believe that the break is here from this range, first wave, second wave, and that was presented some no, this chart was prepared just 2 weeks ago. Yeah, because I need the CGSI compliance clearance. So prepared 2 weeks ago, it was at 77.3 cents, but today it's at 95 cents. So it's already on the way up. It's here. So it's already third wave in the making. Yeah, so if you find that you may have missed it, but I think it's still at the beginning if you look at the bigger picture. So these are the 20 most traded SGX stocks. So half of their revenue are from China in the last financial year. You may want to take a screenshot. So it's not a recommendation, but it's there in SGX public information, so you can go and study. Some of them are not moving. It's still pretty dead, but you go and study their story, what's their involvement, what's their business. So if you can find that through technical. So what I do is that usually how I invest is that I look at the fundamental development. Then I'll look at the technical to give me that timing. So if the technical give me the timing that is at the first, second wave, at the value stage about to go in the growth stage, I will look at it more intimately about what are the business that they're doing. What's the financial statement? Then we look into it, whether it makes sense. Yeah, so if it gel with my idea that the third wave from value is going to go to growth stage, then I may want to put down some of a stake in that company. So again, some expansion of the not individual stocks, but these are the ETF that you can study into as well. And also, there's also those China is hot. If you can trade the stock in Hong Kong, those China stock listed in Hong Kong, but you also can consider those Hong Kong SDR as well. Okay, so those you can talk to your broker how to use that. It means that those Hong Kong listed stock, they also have this parallel listing in Singapore market. Yeah, so you can speak to your broker to understand more about that as well. Okay, so we have this every week we have this case study with some of the investors. So what I do is that I throw them a chart that's naked, that's empty, without research. But they will know that usually I'm looking for the value stage, which is the first wave, second wave, looking at growth. So I asked them 2 questions about Xiaomi, and that was April 2024. So remember that in 2022, 23, I'm seeing something about Asia, I'm seeing something about Singapore. So since that, I work very hard to identify individual stocks or this and that for my personal consumption. Then in the same time to share what's my thought on that. So April 2024, I saw the first wave, second wave, a value stage for Xiaomi. Of course, my take is that they also enter into the EV market. Yeah. So then I asked them 2 questions. Can you identify the current stage? Is it income value growth or decline stage? And based on your question one, your answer to question one, share with me your observation. So, and that was at 16 Hong Kong dollars. So today, it come to pass 1, 2, 3. And I think that this growth stage is not euphoria yet, but I think will not be too keen to get into at this price and time. But I just want to showcase to you that look at the macro. And what you can do is that if you miss on those stocks that have run up, which I think you're going to see more and more, I perceive that. I cannot say it's a sure thing. I only perceive that. But there's a lot of other stocks that is still quite stagnated. So study into those and keep on looking out for the value stage, which is 1 and 2, that whether it's going to get into 3. Yeah, so I think this will be my work for this year in 2025 with partnering broker. Maybe can continue to identify some of the shares who are at the wave 1 and 2 about to come in maybe the coming series that we may have. Now, just want to share with you the last session that we have in November 2024 with CGSI. The topic is how US and Chinese economy hikes affect Singapore. So now, so at the end of the last segment, which was in November last year, I showcased 4 slides. So I give you some homework. Those that have attended, you may still remember. I say that which one has the greatest potential for 1-2 wave going to the 3rd wave. Yeah, uh, uh, it can be fundamental development, it can be technical, but that's why I'm seeing technical is good, fundamental also good as well. So of course the answer is Yang Zhejiang Finance is very straightforward. There's a 1-2 wave. And where is Yang Zhejiang Finance here today is at 56 half cents. So then was at 39 half cents. That was in November. So same thing as well. Every week I will ask you 2 questions that can you identify the current stage? Is it income value growth? And someone, Freddie, say that it's a value stage. So at this point, and I hope that you'll feel encouraged that is sometimes it's a lot of common sense about investment. I try not to buy into something that don't move. But if it don't move, I need to understand why. So is it if it don't move, then I need to also cash out. Maybe some small losses, cash out. Keep your fund productive and don't overtrade as well. Don't over invest. Invest here and there because literally there's a lot of abundance of opportunity. There's so many things that you can buy and sell, but don't do it loosely. Do it responsibly. And before we get into Q&A, I think I'm moving very fast and I just want to download everything to you. So just want to have some contact, some point of contact if you you enjoy the topic I share, you want to have more. So every week I will post an insight video in YouTube. So you can follow my channel, which is my name, KONHW. And those who interested in the case study or quite fascinated on a weekly case study, you can go to the website waypedia.com to find out more. And of course, that's my email, conhao@waypedia.com. So if you don't have time to take your questions, then just feel free to drop me a note. But please don't ask me what stock to buy. But if you find that there's something that you don't quite understand what I explained today, you can feel free to email me. So I just pass this time to Nixon. Nixon.
Right. Thank you, Kong Hao. Again, a very interesting session. Before we continue further with the Q&A, so just allow me to share my slides here. Okay. So I just want to quickly run through. For today's session, we will appreciate if you can help us with the feedback. This feedback is important because it is through this feedback that we are able to continuously bring Kong Hao back every quarter because this will go to management to, for us to support this series of webinar for free so that Kong Hao can share his views and as you can see, because we've been doing every quarter, right? So you can see the progression of Kong Hao's views and his thoughts and how the market actually responds, and quite amazingly as well. So before I go to Q&A, appreciate if you can just use the QR code, or let me also just share the link of the feedback form here. Hold on, let me find it for you. Yeah, I'll put it in the chat box. So appreciate if you guys can help with the feedback form. Very, very important for us. And then we will go to questions. I think Kong Hao has framed the outlook very well, as in like, I still remember he has always been saying, trade the US market, accumulate commodity and so
Asia.
accumulate
Yeah.
Asia
Yeah.
and buy commodities.
Yeah. So back then I can't say it's China because a lot of bad light about China. So
Right, right.
I
So now
try to
it feels
salve it
that,
as Asia, but I'm referring to China actually. So,
right.
yeah.
So back to you, Kong Hao, stop sharing. So I think the question is, the three main continent or market, like US, China, Asia, right? Asia as in Southeast Asia, China, Singapore included. So there's a question in the Q&A box from Bobby. He's asking, do you think the possibility of US recession might occur this year in 2025? And if so, should we focus on Singapore bank stocks since they account for half of the STI?
Hmm. Yeah, I think it's a good question. So before I take on this question, just want to add on to what Nixon said that we are mostly accurate over the last 4 years. Just to clarify, I think cast a spell on the market. Yeah. So
Mhm.
I would just want to encourage you that I just use market information that's given to us and study them. It will make a lot of sense. So all the time, market will give us a lot of information. You just have to take a deep interest to study on them. Sometimes it may not come immediately, so you just have to be patient. So therefore, I always advocate, no matter how confident you are, don't over invest. Yeah, don't be overconfident because sometimes we need that patience. So I was hoping to STI will break in 2022, but it didn't come. So I waited for 2 years until end of 2024. So therefore, my proposition, my statement in 2022 is always accumulating Asia. But now I think it's not just accumulate, but seriously look into initiating a position to buy them. Now, so your question about what is the possibility about U.S. recession may come, I think is possible. What we see here is that the whole economy about U.S. the stocks. If you maybe not the U.S. economy, I think we're not too interested in the economy because that was a country, but we're more interested in the stock market. So I think the whole stock market in the U.S. is driven by the Magnificent Seven, all the tech stocks. And then, of course, the tech stock, the backbone is driven by AI, the introduction of AI in November 2023. Is it November 20? No, November 2022 and the whole year 2023, 24, it was exuberant for US market for the Magnificent Seven. So now, whether US is going to enter into recession, good question here. It really depends on, to me, is the tariffs, because Trump is unpredictable. Whether he's going to stop or going to continue, nobody knows, right? So, but tariff will be harmful for the economy. Yeah. So that one is one point. It may hit, may not. I do not know. I don't have the answer. But again, therefore, when we look at the price behavior, we should be able to tell. Yeah. And then the second thing that important, what I just mentioned about the Magnificent Seven, is that the growth engine for US over the last 2 years, 23, 24, the whole entire year was ChatGPT, AI tech. But since the emergence of the DeepSeek from China, then this pie, the very lucrative pie, will have to share with the competitors, who is DeepSeek and other smaller companies. Yeah. So in that measure, I think recession, I'm not saying that it will come, but I think we'll have a lot of resistance. So we got to be very careful. Then whether we should invest in SG bank stocks, I would say that if you're already invested, you should continue to hold on to it because they pay good dividend. And I think Singapore have positioned well as a financial hub, is trusted bank. It will stay there. So my only concern is that when interest rate become too high, looks like it's going to stay here. And is there a likelihood that interest rate may go up? It really depends on the CPI in US. If CPI in US start to pick up again, then there's a likelihood that interest rate may pick up. So which is good for bank, but it can be a double sword as well. Yeah, because in the context of too high interest rate and with recession, say US recession, so it also depends on the bank, their exposure to US. Yeah. So if let's say a lot of exposure to US with high interest rate, then that may create some default, yeah, default payment as well. So that's something that I just throw you some variables that may happen. So, but I still have faith in US, Singapore bank. So have some of it, but I think the focus, what I'm trying to say here, based on my personal uh, uh, investment strategy or take, is that Singapore banks are considered a very traditional stocks. We should have it, yeah. So, but I would like to take some adventure into some China exposure stocks. I always hope that over the last 2 years since 2022, that there's more tech stock to be introduced in Singapore. But now my strategy have changed. If China growth story is going to take place, and fundamentally we look at it and structurally we have discussed, seems like it's happening. So I hope that they will success, because if they success, I think we'll benefit. Because earlier I mentioned about the investment with Paul, do the most in the world is in China. So there's also a lot of company, 50% of their revenue derived from China. Yeah, our investment in China. So study into these companies as well. Don't miss it, because the strategy of investment is this. Now, Singapore Bank, maybe some is already at $30 range, right? So for it to go to one bagel from $30 to $60 is possible. But I think for Singapore Bank at this point in time, it's quite tough from $30 to $60, right? But there are a lot of stocks just now I mentioned, if you look at it very carefully here, is that there are stocks like 39 half cents, the Yangzijiang Finance, right? When it go to 59 half cents, you calculate instead of percentage, how much was it? Yeah, so including the Xiaomi, last year we discussed with um, in in my case study here, Xiaomi, that was at 16 Hong Kong dollars. Now it's 49 Hong Kong dollars. So in terms of percentage, is a folds, yeah, a few folds. Huh? So if you that excites you, I think there's opportunity is in abundance. That kind of multi-bagger opportunities, I think potential is there. For traditional stocks, if you're okay with dividends, maybe you'll still continue to grow a few percent per year. I think if you're happy with it, it's good. I like that, but I think we should have a basket of everything. Yeah, so that's what I would do. So earlier, my disclaimer was that whenever there's uh, uncertainty, we take measured risk. But whenever you see opportunity, we have to take a bolder risk. Yeah, but still calculated risk, but bolder. So I think the opportunity for Singapore and Asia is here. And there's also I believe that there's a flight to quality. Yeah, it means that when the world outside is getting a bit unstable, but Asia, I think we should be doing quite okay. Yeah, the money should find a flight to Singapore, which I think earlier we studied very briefly that we saw that what happened to 2022.
Okay, thanks, Kong Hao. So if you guys got any questions, do feel free to key in the Q&A box. Yeah, we will take on questions for a couple of minutes more. And I think, Kong Hao, you talk about, I think two main question I have on my mind is, I still remember the last few quarters we're talking about, we're looking much more deeply into the US interest rate cut, and we were thinking when the cut will come, how much cut there will be. It seems that now that there is less chance of a cut and more of holding a rate or even letting the rate go up. Is that right?
I'm not too sure if rate is going to go up, but even if stay here is not good news for US businesses. Why? If you can go and look at the US yield curve, US yield, I think for Singapore, we are very familiar with the SIBOR rate, the 2 years tenure, because when we get a loan from our houses, it's always a 2 years mortgage rate. So we're very familiar with the 2 years tenure mortgage rate. In that context, it's also called the 2 years yield, 10 years yield. So it's all these are borrowing rates. So what happened here is that their yields, 2 or 10 or 5 years, is still very high. If I'm going to go back to before 2022, their 10 years yield means that their 10 years tenure or even 2 years yield is at a range about 1.5%. So imagine you're a property owner, you get loan from the bank. Yeah, so today it is still at 4.5%, the 10 years yield or 2 years yield or tenure. In Singapore, we call that mortgage rate. So it's still at 4.5 despite the inflation from 9% come down to 2, but the yield still very high. Uh, which unlikely Jerome Powell is going to cut rate anytime soon. So as long as it remain high, so sometimes we have to service our loan. Can you imagine in a business perspective, they have borrowings as well. So if they every month are going to pay 4.5%, and that will be stress to them. But not forgetting, because my slide also say that the real threat, which we also study the stock market as well, when inflation mentioned from Jerome Powell, the stock market went to frenzy. We saw that just now. So if that happened, that means the wild card this year is still inflation. If inflation is moving up again, then there's a chance, I hope not, that the Fed will increase the interest rate. Then I think that will become a trouble situation for the US stock market. Yeah.
Okay, we have a question here. It's about currency. I'm not sure whether Kong Hao will you be okay to take the question. The question is, what is the outlook for US dollar, Sing dollar, and Chinese yuan?
Yeah, good question here. Um, I have a business as well. I have two business. So usually, I will try my best to settle in Sing dollar, not the US dollars. Yeah. So earlier we mentioned the chart here is that, in fact, we are the best position here on earth. If you earn in Sing dollars, keep in Sing dollars, or if you have no idea to invest, then invest in fixed D. Not bad. It's offering about 3% interest, right? Yeah, 2.93, so it's about there. So it's very stable. And earlier we also saw the dollar Sing chart over the last 40 years. The Sing dollar has been strengthening. I think it will remain this way. The Sing dollar will continue to strengthen. And I like the yuan as well. And of course, it's very difficult to invest in yuan. But how to invest in yuan? Very simple. My plan since about 2016 was just to buy China stocks, China fund, because as the China story grow, I'm also invest in yuan as well. I may not be carrying the physical CNY, the yuan or offshore yuan, it doesn't matter. But as long as I invest in SGX listed uh, um, China derivatives, yeah, their stocks equivalent or the the list of stock that I showcased just now, that 50% of revenue is in China. So as long as the China yuan strengthen, these stocks should perform as well. Or you can invest in uh, China stock listed in Hong Kong as well. So CGSI have that in their platform. So a lot of alternative to look at. Yeah. So I think it's a good question. Yeah, something different, but it is in me all this while. Yeah, I always wanted to keep more Sing dollars, and I also hope to invest in China yuan. But how? China stock market, or its related stock market.
So in summary, you prefer Sing dollar and Chinese yuan
Yeah,
over USD, right?
yeah. Of course, the love currency is, of course, I don't talk with CGSI, but for those that follow me with other uh, partners, that since also about 2022 and before, is the to me gold, silver is a currency, is a form of currency as well. So I think they did very well, especially the last 12 months. Yeah, yeah, yeah. So gold is a currency as well. So
Yeah.
where's gold in SGX? At the STI. So have I have invested in STI? Yeah, a lot. Yeah. So most of my portfolio is invested in Spider STI, Spider Gold listed in SGX already. Yes.
I think there's a request in the chat. Guang Hao, can you show your slide for the stocks, the China
Oh,
stock,
okay, sure. Yeah.
so that they can have a look at it.
Let's see if we can go back here. I think you're referring to this one. Okay.
Yeah, I hope the request was from Laura, right? So Laura, this is the one. This is a list of 20 most triggered SGX stocks
Yeah.
that have half their revenue from China.
And the next one will be the ETF. I think this will be helpful. If so sometimes you're lost what to do a stock pick, then generally you just get into the ETF. Yeah.
There's a question from Lincoln. It's asking, will Baba continue to search Alibaba?
The one we have to look at it specifically. But yes, Baba is in my first wave, second wave. So it's one of it. Yeah. So Baba is in my bag. So I wouldn't say because I can't go into the specific stocks unless I base on studies. But I would say that the Baba is one of the China A50, one of the blue chip stocks. So I think as by and large as whole, if I'm seeing A50 or China Composite Index as the benchmark will grow. So I think since it's part of the index, so the stock Baba just mentioned should also tag along as well. So look out for their development, their story, and get into the technical study if you can, which I enjoy technical study a lot, because that give me, from my experience, it gives me an edge of timing it. Yeah, so timing is important. So sometimes as investor, my experience is that we can buy good stocks, but if don't perform, yeah, but it still pay me dividends. That's I think the beautiful part about Singapore stock is that sometimes buy don't perform, but it still pay dividends. So it still have some payout in while waiting for it. So while waiting for it, if I don't like the stock anymore, I can always cash out without a loss. Then you can shift to something else. Yeah, so that's a point of consideration. Yes, blue
Okay.
chip stocks.
Yeah, talking about China, I think we all know that China in the last couple of years has been having its own challenges with the economy and hence the equity market as well. So do you foresee that this year there is some catalyst coming in and to drive the China market? That means we will see a bottoming out and uptrend.
Okay, so I have to refresh back here again. When I talk about first wave, second wave, the first wave bottom, the start of first wave bottom is the bottom already. Yeah, it's already the bottom. So the first wave, that means from 0 point to the first wave, that one is already the bottom. The 0 points are bottom. The first wave is an indication that they are coming, the value. The second wave, the retracement, which that's what we saw since October onwards, November, the market kind of come off and there's a period of waiting. And but what we just saw, the deep sea emergence is already entered into the third wave. So if technically I'm gonna see it, that I'm seeing that the third wave has already begun, and it is at the beginning technically. But if you look at it fundamentally, everything makes sense. The debt, I don't think is an issue, which I described. Inflation, they have no inflation issue. Yeah. And then growth, there's a lot of growth story. In terms of their EV, look at their EV. Yeah. And also their now the latest one on block is the AI. So that's the 3 points I'm trying to see. Technically, is moving up. Yeah, but of course, all these are there's no 100%. Yeah, so therefore, however confident I am, I never sell my house, go and buy houses to stay. Yeah, so yeah, please don't do that. So, um, technically, it looks good, but it also when I integrate the fundamental understanding, is coming. That's what I'm seeing here. So I hope that the next sharing that I have for the next 2 quarters with CGSI, then I can give you a report card based on what we have studied now as it come to pass. Yep.
Okay, I see. So the important point is technically, the opinion is that we have passed the bottom of the Chinese market.
Yes. It's already
And,
on the way up.
right, right.
Beginning of the growth. growth story
Right.
technically. Yeah.
Yeah. So that's where the opportunity is, and
Yes, yes.
all
Opportunities
the
now.
stars seems to be aligning. So,
Yeah. There's a
okay.
lot of opportunity. So but of course you have to work on it. Talk to your broker, they are there. They were able to help you. So for me, I spend the time to do research. So this 1 hour I just pour everything out to you. I hope that benefit you. Yeah, from years of research I have, then condense into today's delivery.
Okay, great. Thanks, Kong Hao. So allow me now to share my screen. So we're done with questions. So while I share a couple more slides, if there's any question, do feel free to key them in the Q&A box. If there's no more questions, then I will just share my slide, and that's it for tonight. So just a quick reminder, Hong Hao's recording will be uploaded on the website Learn from the Pros. The link has been shared in the chat box, so you can always refer back to this URL for all the Hong Hao's recording. Like we mentioned about his past quarterly session that we had. You can view all his past recording over there. It's recorded, and you can listen to them and see. He did a very nice summary in today's session in the beginning. And then just off the press, good news, we will be running a session next month with Ho Seng Fu. Ho Seng Fu was a remisier of CGSI, and he's now independent. He is a trainer of SGX, and he'll be running a series of 4 session workshops on the Tuesday of 8, 11, 18, and 25th of March. So again, this is an opportunity to learn free from a charting master. He is going to talk about technical analysis. So for anybody who is keen about that, do sign up with the link. I also share, okay, the URL, the QR code is there on the screen. You can take a snapshot or use your mobile phone to go in while I share the website link. Hold on. Right. And then with that done, I'll remind all of you that please give us your feedback on the feedback form. The link also has been shared. I'll share that again quickly. And let me see. Okay. So really appreciate all of you to give us your feedback on the feedback form. Let me see if there's any more questions. Okay, I don't see any more questions. So if there are no more questions, then I'd like to say thank you for everyone for taking your time to join us. We do apologize for the technical issue that we had to start late. And of course, a big thank you for Kong Hao for his sharing. And we definitely look forward to having him back again to share with us in 3 months' time to look at how the market has transpired. So with that, I say thank you, everyone. I'll just keep this screen on for a couple of minutes so that you can do your feedback as well. So thank you, everyone. See you all again soon.
Thank you all.